Singapore Sovereign Wealth Fund GIC says its long-term performance remains resilient even amidst a resurgent virus and rising inflation. Its key metric of investment performance came in at 4.2%, just slightly below the 4.3% last year. Heidi Ng with more.
Over the 20-year period ending 31st March this year, GIC's annualised real rate of return came in at 4.2% above global inflation. However, given an exceptionally uncertain outlook of high inflation and growing geopolitical tensions, it says it'll continue to double down on diversifying its portfolio. Its holdings in inflation-resilient assets like real estate and private equity continue to rise. This has been aided by robust deal activity and strong asset performance. It also highlights sustainability and technology as two key drivers of change in the global economy that GIC will continue to invest in. One analyst says the fund can also play an active role in leading businesses in the low-carbon transition.
Because you are not just looking at it from a helicopter standpoint, you are involved with those companies and businesses on the ground. You have, in that sense, better understanding of the risks involved, and therefore can take companies through the different stages that allows them to become from small to become global dominant player in sectors or industries or technologies that help, say, in the ESG space.
By geography, the allocation of GIC's assets in the United States has increased to 37%, up from 34% last year. Asia excluding Japan forms 25%, while Japan makes up 7%. While its Asia allocation has fallen slightly from the previous year, one analyst says China could be a bright spot.
Once China opens up, which I suspect will happen early next year, there will be many opportunities in China, in travel, in entertainment industries where GIC can say, okay, because China is a huge travel market, okay? And there's a huge pent-up demand there.
But he also warns that geopolitical conflicts could trigger a global economic slowdown.
US is already slowing down as an economy. We can expect Europe to also be slower because inflationary pressures are big there, and those central banks have already reacted in those countries to tighten the economy. In Asia, maybe we will not see.
GIC also contributes to the single largest source of government revenue, the net investment returns contribution, along with the Monetary Authority of Singapore and Temasek Holdings. The NIRC is an estimated $21.6 billion for the current financial year.